Welcome back, everyone, to possibly one of my most favorite locations to consider investing into both short term and long term, and that is Albury Wodonga. If you've been around my channel for a while, you know that I've covered Albury Wodonga many a time, and almost an year ago I covered this location. But I wanted to give you guys an update and why it is still showing good signs of growth despite having a lot more competition in today's current environment. For those of you who don't know what Albury Wodonga is, it's essentially a location right on the border of New South Wales and Victoria with a huge amount of potential, a large regional hub, very well economically diversified, and there's still great potential. And the first thing I like to do always is to go through the data of this location. Now, with Albury, you have a $720,000 median buy price. You can find properties anywhere from around $550,000 plus, even close to $1 million. And when we start to look at the data, we can see that stock has absolutely started reducing and has been reducing for quite a bit of time. And when you look at days on market, demand is continuously picking up, with the market becoming more and more heated as the months go on. And similarly, when we look at the LGA level of Wodonga, we can see a $650,000 buy price. And when we start to scroll down, we can see that growth has already started to happen with the 1 year change of around 7%. Rents are rising around 7%, which is a really great sign to see. And when we look at the data, once again, stock has been falling since the start of this year, and demand has really started to pick up as well, with the market becoming more and more competitive. And so there's a number of little locations that you can consider across Albury Wodonga. Now, to be quite honest, if you looked at this map and you picked any house, you will likely see good capital growth over the next 6 to 12 months. That's how good the market is at this point in time and how competitive it is as well. And to show you an example, some of our favorite locations to consider jumping into is a location called North Albury. Now, the median buy price is around $500,000. You really need about $550,000 to get something of good quality. You can get about 4.5% to 5% yields possible. 1 year growth change is around 3%, and the median rent hasn't been rising as much, around 1.15%. There is a lot more renters in this suburb itself, with about 41% being renters. But overall, when you look at the stock levels and you look at demand levels, we know that capital growth will be coming into this area, and it already is happening at this point in time. We can see the vacancy rate is a bit on the higher side, around 3%. This is likely because there are more investors buying into the area. Hence, there is more rental stock available, leading to a rising in vacancy rate. Similarly, another very owner-occupier friendly location in Albury is the suburb called Taronga. Now, this is around $676,000. You really need closer to that $600,000 to $650,000 buy price to be able to buy here, and you can get about 4.5% yields for the right property if you are looking hard enough. And we can see that the typical price is around 3% growth over the past year, and rents haven't been rising as well, but much more better in terms of socioeconomics. A much better ERSAT score of around 7, a much lower rented to owner occupier ratio sitting around 25%. So it's a very owner occupier friendly location. In a similar vein, we can see the vacancy rate is on the high side, which is a bit of a concern for us. So when you do purchase a property in Taronga, for example, you have to set your expectations right with the rental return. It may sit on the market a bit longer. It may even fetch slightly under market rent as well. So set your expectations right if you intend to buy in this location. But we will see good capital growth, with stock levels absolutely plummeting to very low levels, and days on market is getting stronger and stronger as more BAs, as more owner occupiers continue to buy in this location. Another suburb I want to talk about is Lavington. Now, Lavington's buy price is around $581,000. You do really need around the $600,000 mark to find a good quality property in this location, and you can get 4 to 4.5% yields. Now, those people who don't know about Albury Wodonga, Lavington also has a code name called Stabbington. It's not the most friendly or high socioeconomic areas, but it is still fested with good opportunities in this location. Prices have already started moving around 7% over the past year, and rents around only 1% increase. You can see the socioeconomic score is 1 compared to nearby Taronga, which is around 7. So much better in that location. And you can see the rent to owner occupier ratio is around 39%, which is more in line with North Albury. And that's okay, because we know that socioeconomics is a factor when it comes more to the type of tenant you put in the property. But when it comes to capital growth, it will still grow in value, and it's been proven many a time throughout many different locations across wider Australia. And it shows a very similar trend. You can see the stock levels of Lavington absolutely plummeting, and demand and also picking up. Now, this isn't just located to these specific locations in Albury. You can always pick up any location in Albury. Like if I searched up West Albury as an example, and I looked at the data for you live, and you start to scroll down, you can see that prices have started rising. Rent's not really rising that much in Albury. The ersatz score sitting around 4 and 30% rented owner occupier ratio. West Albury is a bit more of a premium suburb in Albury Wodonga, so there is a lot more owner occupiers in this location. But you can see that stock levels have been falling. The demand trend doesn't look the best in West Albury because it does fetch that more premium price tag. However, good opportunities are still being sold extremely quickly. In a very similar vein, if you look at wider Wodonga, you really need about 600,000 to 650 to secure a good property. You can get properties around 550 if you work really hard and you look extremely carefully, but those opportunities are becoming rarer and rarer as time goes on. And we can see over the past 12 months, almost 10% growth has happened, which is just excellent. Rents haven't been rising too much in this pocket itself, which is a little bit of a concern, but it's something you could look to trade off. A decent ersatz score and an acceptable rented to owner occupier ratio around 37%. Affordability is still very good under 35 years, which is what we like to see. And stock levels have been absolutely falling, with demand really picking up over the last few months. And we are seeing that reflection in capital growth as we speak. So when you look at Albury Wodonga, there is a number of suburbs you can choose a property in. Now, that doesn't mean you just go buy anything and everything. You still want to make sure the property and the asset that you're buying is in a good street. It is a good property. Is it a brick home? Is it a weatherboard home? Is it on stumps or is it on concrete slabs? You still want to be making the right decisions, even though there isn't much stock. Yes, you can buy a crap old property built in the 1950s, but if it's going to be a headache with maintenance costs, damages done to it, it's on an old dishwasher, etc., and it's going to cost you a fortune to maintain, then it might not be the best asset for you. So please don't just buy anything that you see coming up in Albury Wodonga. Still be smart about the decisions, because there's some streets in North Albury, in some pockets in Springdale Heights, that you really wouldn't be buying in if it was a cooler market. And I'm really seeing some poor decisions being made by some investors who are purchasing into this area because BAs are giving them properties that aren't of good quality. But nonetheless, if you do find a good property in Albury Wodonga, I really would be picking it up because it's great for short-term hold and a long-term hold, and I'll show you why in just a second. Now, I have over 3,000 subscribers and we have close to 300 members in the under 450k community. So what are you not doing by not subscribing to this community? It is an absolute no-brainer, guys. You get access to templates, you get access to resources, you get access to personalized mentorship, deal vetting, and we have so much content available to you guys in the community that you will be missing out if you aren't part of it. We have experienced investors helping each other every single day. And all you have to do is just read through the amount of success stories, number of people who have purchased properties in good quality areas throughout the year, reaping massive benefits and massive results, all for a membership of $35 per month. What are you doing? There's other BAs selling you $15,000 services and other property gurus selling you $10,000 courses. You have nothing to lose by making the simple choice to join the cause, to get the help you need, and to succeed in property investing. So don't be a fool, jump in. Let's get back into the video. And the next thing I want to do is go through the economy of Albury Wodonga. Now, I'm going to have to cover this in two little sections because they don't have a combined on REM plan. But you can see home about 60,000 people, 30,000 jobs, $11 billion economy. It is not some small regional town, right? It's a large regional location. And when you start to look at the industries, it is well diversified into healthcare, retail trade, construction, education, training, and more. And when you look at the exports, it's primarily manufacturing, construction, and healthcare as its primary sectors. Now, it's a very diversified location. And similarly, you look at Wodonga, it's another 45,000 people, 20,000 jobs, and another $10 billion economy. And when we start to look at the industries, it's also into healthcare, public administration, safety, construction, and more. And obviously, the jobs you can work in Albury, you can work in Wodonga, etc., right? And in a similar notion, they have manufacturing, public administration, safety, and construction as its major exporters in this location. Now, one thing I did want to say about Albury Wodonga is that they have a huge project coming in, the Albury Wodonga Regional Hospital Project, where they'll deliver a major regional hospital and improved healthcare services to Albury Wodonga and the broader communities. The New South Wales and Victorian government have committed about $225 million towards the redevelopment of the hospital, and another $108 million already committed by the New South Wales and Australian government, totaling $558 million. If there's any project I like to see in a local area coming about, it's regarding healthcare infrastructure, because that brings local jobs in terms of doctors, construction workers, nurses, midwives, and them all. This is a huge project. It is going to benefit the economy, and it's going to continue to build Albury-Wodonga into this massive regional hub. On the flip side as well, you do have other major contracts like the Inland Rail project, which has been around there for a while, valued around $301 million. And then you also do have a solar farm, which is in detailed planning. Of course, it's only detailed planning, so anything can change, but that's a valued estimate of $1.2 billion. But the thing I like about Albury-Wodonga is not the projects that's happening here. It's that it has been an extremely consistent performer over a very long period of time. In fact, when we look at the history of Albury-Wodonga, it has never gone through a major cyclical change like a mining town would or a small regional town, right? It has been consistently performing, and it's gone through the COVID spike. But even from then, from 2012 to about 2020, it has consistently seen growth. And that's what we need as an investor, especially if you're a set and forget investor like myself. I like to be called the lazy investor because I don't want to think about things. I want to buy and then I want to forget it. And then in 30 years' time, I want to look back and be like, damn, I made some money. And that's what stands out with me at Albury-Wodonga. So I do believe if you do have that chance to purchase something like this for $606,000, you should do it while you have the chance, because by the time 2026 rolls around in late 2026, these property prices could be in the 700 grand, 800 grand price point, where it would make no more sense to invest here until later on in the decade or so. Nonetheless, this is an example of a property you can find, and you really do need about $600,000 to purchase a property like this. It is a 4x2 in Lavington. You can see nothing special, but it can be rentable, a little bit dated, but perfect for a cosmetic internal reno to add equity. And when you look at this, a property like this, a 4x2, will be rented around 540, 600, 540, 580. So conservative measurements, I've put about 570 in terms of rent, and you can get a yield of around 4.8, 4.5%. And so what that really means in terms of cash flow, you'll be about negative $13,000 per year, or around negative $1,000 per month. After tax, it's only about minus 8 grand. And once rent starts rising and interest rate starts dropping, then you'll be in a much more better cash flow position, and you can borrow again and possibly buy again. And this is a good quality home, right? You can buy this, you can hold it for the next 10, 15 years. It has good bones, a brick home, arguably if it's concrete slab or stumps, I'm not too sure. But a property like this is something you can buy and hold for a very, very long time. But there's also a couple of other things I did want to talk about Albury-Wodonga just before we end this video. I do want to talk about the population's future growth, right? This is why I'm so interested. We are expecting a population of around 70,000 people or 80,000 people by 2046, which is a 30% change in Albury. And in Wodonga, we expect another 35% change to around 62,000 people. So there's going to be a lot of population growth in this location. We need houses for these people. And while there isn't houses, prices are still going to keep growing. And it's a location that historically has shown good population growth as well, meaning that it has a great long-term future. And the other wonderful thing I like about Albury-Wodonga is that it is one of those regional locations where it isn't affected by flood zones. It isn't affected by major bushfire zones. It's got a large portion of the location which is basically untouched by floods or bushfires, which again adds to the point of it's a great long-term hold. It's not like another regional location like Taree, for example, where it's across a major river where it's known to flood. Albury-Wodonga is untouched by major floods or major bushfires. So insurance premiums are low, and it's something that's just on the back of your mind, an easy buy and hold for the next 20, 30 years. But also, like I said, you need to be careful about which pockets you do buy in Albury-Wodonga, because you don't want to be buying in a public housing zone, right? Especially if you're looking around North Albury, Lavington, Springdale Heights, there are certain pockets around Burroughs Road, Logan Road, which is known to have a lot of public housing. Now, this will be evident by the much more cheaper house prices across these pockets and across Springdale Heights as well. I generally would advise against buying them because you're just going to attract the wrong type of tenants. They might trash up your property, etc. But as long as you find it in a half decent pocket, when you cross-reference with your property manager, Albury could be a great long-term hold. So just be careful of that. But public housing is everywhere in Australia, so keep that in mind. But overall, to me, Albury-Wodonga is by far one of my most standout locations that, hand on heart, I believe you can double your money, and then you can continue to double it after that, and then double it after that, and then you can pass it on to your kids for them to double it after that. It's just that good. I can't see it ever facing a major downtrend for any economical reason. If it does overperform over the next year, 2026 and 2027, a minor correction is possible in the terms of 10% or so, but that's okay. Corrections are normal. Albury-Wodonga is a long-term safe bet in my opinion. Of course, do your own due diligence. This is your own journey, your own investing journey, and you have to assess it against your own risk tolerances. But what I see in this day and age with people trading property like it's some crypto and buying in some rural town in the middle of nowhere that's no one really wants to live in, it really makes me concerned when there's much better options, albeit a much higher price tag. You're better off buying in a location like this and just holding it for a really long time. Anyway, that's my opinion, guys. Go check it out. Albury Wodonga, a great location. And if you do need help, jump with the private community. We have over 300 members helping each other out every single day. You'd be a fool not to join. Don't risk buying a $500,000 to $1 million asset without cross-referencing it with people that are knowledgeable about property investing. Till next time, thank you very much.